Are prices set to fall even further as we progress into Q4 of 2025? Right now, in the real estate industry, everywhere we look, prices are staggeringly coming down, right? That's been the trend now for about the last 6 to 12 months as the market has been correcting based off of the events that occurred about 4 to now almost 5 years ago. Here locally in Bend, what we're noticing is that sales volume remains relatively high as it does in Redmond, and prices have been relatively steady, with Bend over 700,000 now for a consistent period of time, and Redmond being over 500,000 for a consistent period of time. However, there are plenty of homes that are sitting for weeks and weeks and weeks on the market that otherwise in a different market might be going in a relatively short amount of time, and they are forced, those sellers, to reduce their price if they need to get a sale done. Now, many people, homeowners that are selling their home, they don't necessarily need to sell. And so they'll dip their toes in the market, put their house up for sale. And then after, say, 60, 70, 80 days, what they're noticing is that nobody wants to give them their ideal number. So they just yank it off the market, and they'll just try it again in a different state of the market, maybe next spring. But right now, what we're noticing as we get into maybe the seasonality of the real estate market here locally, as October, November, December, and January are traditionally the slowest months of the year. Now, October and November can see a lot of activity, but generally December and January and maybe even part of February, they're going to be the slowest transactional months of the year. And it doesn't really matter what the state of the market is. We could have 2.5% interest rates again. It would still be the slowest part of the year because there's so many things that are distracting people in that time frame of the year, especially with the holidays taking up basically half of December. And then, of course, the recovery from the holidays in January is when everybody's out of money, right? They spent it all. And so they got to recover, spend nothing, and then just kind of build it back up over the next month or maybe even 2 months as we progress into a new year. So what we're going to talk about today is the current state of the market as it relates to real estate here in Bend and Central Oregon. It is the October version of the Central Oregon real estate market update. And we're going to jump into it right now to give you guys a feel for what's going on in the current state of the market from a price standpoint and from a statistical and analytical standpoint here in Central Oregon. So stick around. What we're going to be discussing today is predicated all around the current state of the market as we go into the quarter 4 of 2025. What is going on with the real estate market here from a market standpoint? So that's what we have this Beacon report for. It really is a trusted guide every single month to give us that firm understanding as to what's going on in the real estate market here locally. And as we can see here, we'll just pop up Bend right now and just jump right into it. I mean, the lowest hanging fruit, the most curious metric that everybody wants to know about is going to be the median home price. And right now it did dip down a little bit. We're down to 713,000 for a single family home in the city limits of Bend. That came down a little bit from the month before when we were at 769,000, as you can see there. But if you look back over the last 36 months, that's what these graphs are all about, just dating back the last 36 months data. You can see that it's been relatively flat. I mean, sure, month in and month out, it's going to fluctuate. But if you drew a straight line kind of through the center of the data here, what you're going to notice is that there's plenty of months that are underneath the line and plenty of months that are going to be above the line. Sure, it's starting to, or it's continuing to kind of go up gradually, but it's not like it was, say, 3, 4 years ago when we had that abrupt increase in pricing. And so everything's kind of flattened out, and the market has somewhat corrected from that crazy time when just markets were just going crazy all over the country, and Bend was no exception. So if we continue on with this particular situation regarding Bend, in our number of sales over the last month, what we see here is what we had 180, and it's one of the highest volume months in terms of transactions that we've experienced over the last 3 years. In fact, it looks like it's to be the second highest dating back to month 36 of this data sheet here. That's September of 2022. So that's coming right out of that crazy market there, September of 2022. So basically, we had our highest market volume in the last 3 years, just this past month. And so that is a very telling situation. Interest rates are high. They're designed to slow the market down. They've done that. We've seen a very, very slow 24-month period of time as it relates to transactional volume, but we're still getting a fair amount of sales recorded here in the Bend area despite the current market conditions. Now, if you look back the previous 36 months before, say, September of 2022, you're going to notice a large discrepancy. There's going to be a higher uptick in a general volume of transactions is going to be much, much higher, several months with over 200 transactions. We'll show you that here in an image that we throw onto the screen here. But that's what's going on with the current state of the market, designed to slow things down. I mean, interest rates are still relatively high. I mean, they have come down from their local highs, which were 8% over a year ago, to now mid sixes. But I think a lot of people are still waiting for, say, something like a 5.9% interest rate before they really jump in because 6.5%, while it's better than 8%, we're seeing some refinances now. It's still very, very tricky, especially with the housing situation in Bend where the prices are, right? 750,000, 775,000, 725,000 any given month. That can be your median home price. And that just makes it so tricky for most people. And right now, there is some statistics out there that are suggesting that the average renter in Bend makes about $66,000 a year, while the average homeowner makes about $120,000 a year. And so there's a huge discrepancy in income as well. But those that are renting at 66,000 in terms of their take-home pay, that just makes it very, very difficult to qualify for, say, a $700,000 plus mortgage, especially at 6.5%, 20% down. It just makes the affordability aspect of it a very, very big challenge. And that's been what Bend has been dealing with for a long, long time. And Redmond's starting to see some of those effects as well. Now, if we scroll down, what we're going to see here is our median days on market. And it shot up from 21 back in July and August, 31, and now September, we're at 45 days. So the houses are sitting. And that is a very big increase in a very short amount of time from going from, say, consistent 23, 22, 24, and then 21 over the summer months to 45. I mean, could that be a sign of things to come as we go into the slower seasonality anyway, as it pertains to a 12-month real estate cycle here in Bend and Central Oregon? So are we going to see 45 days or somewhere in the 50 range next month? We might. We'll just have to wait and see how things shake out. But that could be a telling sign. For those that are in the market right now, I mean, if you're looking for a home, this is very, very much your time to really seize opportunities. There are many sellers that are really looking to move off of their house because they have to, and they are taking very, very large price cuts that otherwise in a different market they would not be open to, but they have to be now because this is the nature of it. We saw some stats earlier in the summer that said there are 500,000 more sellers nationally than buyers. And so anybody that is a buyer right now that's in the market, they're taking full advantage of the opportunity that presents itself as it relates to sellers being overwhelmed with the discrepancy of the lower volume of buyers. And so that's something to really keep in mind if you are considering dipping your toes in the market as a buyer right now. As we continue on here, we're going to see some other metrics here, cash versus conventional transactions, but we go down to the big one that I always like to share with people, and that's inventory. So this is our sixth straight month. Now maybe it's almost our seventh month where we've had over 4 months of inventory in the Bend market. And that is a huge deal because for the longest time, for about 4 years, it was literally about a month or less. And you can see some remnants of that different market here as we were just slowly coming out of the dwelling of, say, less than a month of inventory that was basically 12 to 24 months long during the 2020 and 2021 buying frenzy. And so now the pendulum has certainly shifted back the other way, and we are experiencing a higher dose of inventory. In 5 months, that's a big deal, especially in the summertime, but now being down to 4 months, still, it's a sign of more of a balanced market, but generally speaking, 6 months of inventory is kind of the norm when it comes to a defined balanced market. And Bend is in a severe housing shortage. And in fact, we are called upon to have over 15,000 more units that are built and available in the next 8 years. And the city of Bend is targeting roughly 1,900 over the next 2 years. And so if you do that math, that doesn't check out to getting up to 15,000 units, which of course, more inventory, more housing available is going to bring prices down and make it more affordable for people. But people are just coming to Bend so quickly. They're moving here on such a fast pace right now. We're projected to have 30,000 more residents in the city of Bend within just the next 10 years. And so we're going to see what happens, but it's really, really growing at a very fast pace. And that's not new to anybody. It's been going on for quite some time, but some of those statistics really start to resonate when you think about them. Okay, 30,000 more people putting us up in the 140,000 person range in terms of our city population. Are we getting enough inventory at a fast enough rate? Well, seems like there's construction going on every which way you look, but is it enough? I don't know. I mean, it's really hard to say. We had 1,300 units built in the last year here, and that's a higher uptick than in most recent years when it comes to new construction. So again, there is a discrepancy, there's a shortage, and we're trying to meet that demand, but we'll just kind of see how things shake out as we continue on over the next 12 to 24 months. Now, if we scroll down to Redmond, it's kind of in a similar boat. What we're seeing here is that Redmond's been very consistent with its median home price. You can see here that 500,000, if I drew a line right through 500,000, it's going to be roughly over 500,000 most of the time. And that's been basically the definition of what Redmond's been doing over the last 3+ years. They've really come on strong. They're growing at a very fast rate as well. It's very high in demand. And I talked about it in my previous video where, the cost of living is significantly lower in Redmond, but it is going up. It's becoming more unaffordable for many people as well, but it's still, compared to Bend, 13, 15 miles apart. It is a whirlwind of difference in terms of affordability. And that's something that a lot of people want to take advantage of because Central Oregon, right? We talked about that in the previous video. And that is something that is never going to change. You can live anywhere in Central Oregon and still get the lifestyle of Central Oregon if you so choose. Now, Redmond is growing and it is probably growing a little bit faster maybe than Bend. They've got roughly 40,000 people in the city of Redmond and they are growing very quickly. But you can see here the monthly transactions report. 57 closings last month. There's really nothing out of the ordinary there. Everything's been kind of ticking in the 60 range over the last 6 months or so. And certainly you see the January, February, March lulls is going to happen every single year. And that happens in Bend as well. That's the seasonality aspect of real estate as people get distracted during the holiday season and then they recover from the holiday season in the couple of months after at the beginning of a new year. So we'll continue moving on. You can see here days on market is doing the same thing Bend is doing. Maybe this is a sign of the lull that's coming to the markets here towards the end of a year that happens every year. If you're a buyer, if you're a seller, I mean, it could be a good time for both. I mean, the selling aspect, it all depends on your pricing strategy. But if you're the buyer, you do have an advantage right now because you are few. You are few and far between in this market right now. So take advantage of this opportunity because if you see something that is slightly out of your price range right now, there's a very good chance that we can negotiate that into your price range in this market right now. So something to keep in mind. We're happy to have a conversation with you about that if you so choose. Now, if we continue going down, we're going to see building permits 6 for the month of September. And you can see it just kind of fluctuates up and down, but going into the lull, it's going to slow things down. Inventory in Redmond, though, that's been the story. Basically 2 months of inventory now has been the theme of the entire year, with the exception of a couple of the summer months where we had 3 months of inventory. And so Redmond might see a larger housing shortage than Bend as a result of their growth right now. And that could be what drives prices up and keeps them up over 500, even to the mid 500,000s, is because there's just no homes available in Redmond. And that is surprising because Redmond's growing like gangbusters, and it seems like there's new construction every which way you look over there as well. Now, if we look at some of our smaller towns in the Central Oregon area, some fantastic areas, and they are growing like gangbusters too, but they just don't see the volume, and they see just wide-ranging fluctuations in price each and every month. You can see with Sisters here, a town of about 5,000 people in the west portion of Deschutes County, a fantastic little Western style town. 690,000 for a single family home. That's a median price for last month, and we had 14 transactions. Days on market was 35 with 6 months of inventory. See, this is what we're seeing and experiencing in the smaller towns is the inventory spikes based off of where the current state of the market is. It becomes one of those situations where people that bought homes in the last few years, now they want to put their houses up for sale, and there's just not that demand right now. You can see here 14 sales. Sun River, kind of a similar situation, a resort style town. And so their median price will fluctuate each and every month in wide ranges. But 16 sales and 35 days on market with 5 months of inventory. Lapine, 357,000 for a median. Only 8 sales last month with 41 days on market and 7 months of inventory. So that's kind of come down since our peak of 9 months. That's a lot. That's a lot of inventory. So if you're selling in Lapine, you better be priced appropriately because there's a lot to select from. And our Jefferson County city of Madras could be in the same situation, as could our Crook County city of Prineville. But Prineville is a bustling, charming little town, and they had 28 sales last month compared to Madras's 7. That's all of Jefferson County. That's a very interesting metric there. 7 total sales in the county of Jefferson last month with 5 months of inventory. And then, of course, if you look at Crook County, what we're looking at here is 28 total sales and 6 months of inventory. So that all kind of brings us to a head here with this current state of the market. Right now, what we're looking at is a huge housing shortage, but we're also seeing kind of that natural dip in the market as we go into the later stages of a year. But where could we see some adjustment? Where could we see some things that could change in the favor of those that are renting right now, looking to get into the market? Those that are looking to get into the market, they're probably, they're renting, they're waiting for those rates to really come down. And that could be where they need to be patient, waiting for rates to come down to say 5.9, 5.8. Who knows? Maybe we go lower at some point over the next year. But generally speaking, a healthy interest rate, mortgage rate is probably about 6%, maybe a little bit below 6%. But those that are in the market right now, maybe you own a home and you're looking to kind of change things up. Maybe you need to sell it. Maybe you don't need to sell, but maybe you want to upgrade, get a bigger house with the family growing, or maybe downsize. If you're able to be in the market now in some capacity, this is your advantage and this is your opportunity to really get a property that will otherwise probably start to spike up in value as the market does shift. Now, that shift might take a couple of years still, or it might just take a year. I don't know when that shift will happen, but as things kind of heal up and progress out of where we're at as a result of the COVID boom, this is the byproduct of what happened 4 years ago. We're suffering through this right now. We're dealing with a slow-paced market, but it will pick back up. It will recover. And when it does, what is that going to happen to house prices as more people jump into the market because they have more buying power as a result of their mortgage rates coming down? These are all questions that you have to ask yourself. Could you take advantage of the opportunity right now where you could get, say, a home at a 50% or not, I'm sorry, a $50,000 discount or a $100,000 discount? When it was priced at say 800 or 700,000. I mean, that's what's going on right now. We're talking about 20, 30% decreases in price in a relatively short amount of time. And that's all because sellers need to sell and buyers are just not as plentiful as they once were. So, things to ask yourself: are you in the market, or could you be in the market as a result of the situation at hand and take advantage of the opportunity that presents itself today? My name is Ryan. I'm a licensed broker with eXp Realty here in the state of Oregon. If it's your time to reach out, please do so. Just call me or text me, and let's just have a conversation about your situation to see if it makes sense. And then we can decide, what the course of action should be moving forward, and we'd love to help you. So again, thanks for watching this video. We will see you on the next one.